Well, thanks for tuning in to the Trade Setup with me, Neeraj Shah. And today it's going to be a short one. So I'm going to urge my director, Namrata, you see her firing all the graphics to move very quickly. So the big news is that the Democratic mega donors have pushed Joe Biden to quit. And Kamala Harris events have filled up. This is the big news flow from the US. But that notwithstanding, Dow slid, S&P 500 slid, Asia by and large, KOSPI, ASX, etc. are all looking slightly wobbly as well. But the stage is set for 25,000 on the Nifty, with the Infi ADR being very, very buoyant. Remember, Infi is a sizable weightage out there too. So this is what happened in the US markets. Correction. Futures are flattish. Asia, by and large, viewers, is in the red. I wonder what the implied open is suggesting today. Well, 43 points in the green. Will we make a dash to 25K, or will we succumb to some bit of global pressure is the key question. My belief is that tech buoyancy may continue to aid the market momentum, but there is global pressure, and you have to keep that in mind. Remember, this rally has been a bit stiff and a bit contrarian to what's happening across the world. I would have loved to show a chart of what India has done versus what the rest of the world markets have done, and you will see the difference really. But IT buoyancy is certainly clear because Infi commentary and the guidance will ensure IT buoyancy for sure. And by the way, it's not just Infi. Persistent came out with a pretty good set of numbers too. So that's another stock that you want to watch out for in the session today. I'll come to that in a moment. The only place where I think the run-up has been a bit too swift is all upstream, ONGC in particular, because you saw a bit of a corrective move in all India because of some technical factors as well yesterday. So that is one pocket, and not Reliance, but ONGC is a stock that you want to be a bit careful about in particular because the run-up has been very swift. I know brokerages are upbeat, etc., but you know, there is only some limit to which these stocks move up before they start correcting, if indeed oil prices come off or whatever. So be careful if ONGC and All India and some of the others is all I would probably say. Okay. The other thing is, because we are coming close to the budget, Chris Woods, warning if you will, he says that, well, with the India budget due to be announced in the next week, there seems to be less concern than about a potential increase in capital gains. But he says that if the re-elected government will not make such a move, but the view turns out that if that turns out to be true and the capital gains tax is increased materially, it will trigger a bigger correction than what occurred post the election. It's quite a tall statement, so keep that in mind. Okay, let's move on to stocks very quickly. Start off with Persistent. First up, results beat estimates. 91% of the incremental revenue came in from North America. That's a big thing. People are concerned about what's happening in that region. Persistent and come out smelling like roses when it comes to that. BFSI grew 6% as well, significantly better than the last 3 quarters. And the TCV ACV witnessed slight improvement, hinting at better deal conversions as well. It's an expensive stock, but it's delivered. That's the beauty. Let's see if there's a bit of uptick here today. What will see an uptick is Infosys. Cities, the results we all know are good, right? So I'm not getting into that. But a buy rating, target price of 1850 by Citi. They're saying that they've revised the estimates on better growth, TCV momentum, and free cash flow trends as well. And the Q1 revenue is above expectations. Deal TCV at 87% YOY LTM. All things auguring well. Infosys has had a bit of a run-up, but I believe there is more in store at least today. Now, if it opens 10% higher or 8% higher or what have you, then you might see some bit of profit booking for sure. But it'll open higher for sure. What will not do well is Tata Technologies. Revenues were down 2.5% at 1269. Estimates were 1337. Margins lower, PAT lower. Goldman Sachs has cut the target price to 850 from 900. They have cut the EPS estimates as well by up to 5%. So I would suspect that Tata Tech could well have a somber start in the session today. LTTS is the other one that could have a bit of a somber start in the session today because revenues were down, lower than estimate, margins lower than estimate. Way lower than estimate, by the way, PAT lower than estimate as well. And Nuvama note lays out the reasons why. They say that the management has attributed the weak performance to SWC seasonality as well as some project in North America. However, they've stuck to the guidance, which Nuvama believes is a bit of a stretch given the high ask rate of constant quarterly growth rate. LTTS too might correct in the session today, so watch out for this one. Shoppers Stop might correct in the session today because while revenues were flat, margins cracked, and as a result of which the bottom line, there was a net loss versus a net profit in the corresponding quarter last year. Suffice to say, a bit of a reaction expected in Shoppers Stop as well. Now, what could do well? Let's pull up some of those stocks very quickly. Let's move on to those stocks. Will come up in a moment. Actually, Rallis may also not do well, by the way. Rallis margins too came off a little bit. So I think revenues were flat, but margins came off. EBITDA margin at 12.3 versus 14.1, as a result of which the bottom line numbers didn't look that great. Very likely could react negatively. Now, cement companies had a good margin performance. Both in Sagar Cement's case, revenues were flattish, but the margin performance was good. Sagar Cement 8.3 versus 5.7, so maybe reacts positively. Similarly for Dalmia Bharat too, revenues were okay, flat, but margin performance for Dalmia Bharat too, 18.5 versus 16.9, the estimates were 15.6. So both cement companies have done well on the margin front, so watch out for these. They could do well in the session today as well. So Dalmia Bharat could do well, and Tanla too had a margin performance which was strong, so watch out for that one. Revenues were flat, margins did better, and therefore maybe this stock too does well in the session today. HAL probably has an order win possibility of close to 3,000 crores if I'm not wrong. I mean, this notwithstanding, essentially what means is that there is a leeway for an order of 2,970 crores. Let's see if HAL reacts to this one. Lastly, there is a note from AI Engineering from BNP Paribas on AI Engineering, just this first line. They've initiated with an outperform rating, target price of 4883, cost leader, very good going. Let's see if this one reacts positively. Thanks so much for tuning in. Sorry for a truncated version, but time was running out, but thanks for tuning in today.